Hey, good morning, everyone. I want to bring a live market update to you guys and talk about the changes in the interest rates. I want to look at some trends that has been or have been taking place over the last couple of months. I also want to talk about the changes to the loan limits. So we're looking at FHA and conventional mortgage loan limit increase. And I also want to talk about a change that's coming to the market on April 1st, where Fannie Mae is going to increase or add a fee to the purchase of a second home or vacation home. So the first thing I want to talk about is again just going back to the increase of the loan limit. FHA loan limit has been increased in the South Florida market to $460,000. That means that if you are a first-time home buyer or a buyer of your primary residence, if you qualify for an FHA loan, you can go up to or a loan limit up to 460,000. Now, the loan limit does change depending on the county. So the 460 again is in the South Florida market. We're looking at Miami-Dade, Broward, and the Palm Beach counties. So it's a good idea to double check in your area what the loan limits are. I will leave a link down below where you guys can check your own on your own for the loan limits. So there's also a change coming on April 1st where Fannie Mae is adding a 1% fee or a charge if someone is buying a second home or an investment property. And that's a big change. It's going to essentially make it a little bit more costly for people to buy second home and vacation homes. You guys remember I did a market update last year when Fannie Mae increased the fee for purchasing investment properties to 4%, right? Essentially, what that did to the market was the banks or the lenders had to pass that fee on to the borrowers, where it now cost it now costs the buyers an extra 3 to 4% to buy these properties. You saw an increase in interest rates for investment purchases and so forth. So we're going to see the same effect now, starting April 1st. So if you are on the fence about buying a second home or a vacation home, I strongly encourage that you do it sooner rather than later. And the last kind of topic I want to talk about is the trend on interest rates. So I want to show you guys what the Fannie Mae Freddie Mac rates have been doing over the past couple of months. So directly from the Freddie Mac website, Fannie Mae rates are essentially about the same. You can see there's been a you can see there's been a steady pace on the interest rate fluctuation up and down to where in the last month or so, the, towards the end of last year, we saw a sharp increase in the interest rate. So where everyone is waiting for March for that for these interest rates to change, you can see the market has already adjusted to these interest rates. So historically, it's worth mentioning that these interest rates do follow or do tend to follow the 10-year Treasury bond on the Federal Reserve. So when we're looking at interest rates or anticipating the rise of the interest rate, waiting for this March date where the Federal Reserve has already confirmed that they're going to complete the taper, the market you have to remember the market sets these interest rates for mortgages. The mortgage rates are essentially set by the lenders. The lenders from they tend to follow the 10-year Treasury bond, and the interest rates that will be increasing on March are the short-term variable interest rates. So if the Federal Reserve do increase those rates, they don't directly affect the mortgage market. Those interest rates affect more things like credit cards, home equity lines of credit, etc. Again, short-term variable interest rates. So we're already seeing a an increase or an adjustment in the market on the mortgage interest rates. So if you're waiting for that March increase, guys, it's already here. You don't have to wait for the market to increase the rates, for the market values to come down to buy something. If you're on the fence, if you're renting and you're considering buying, the market is already adjusting. I made a video of my last video upload was the comparison where if somebody is renting and they're waiting for that market values, those market values to adjust down because of the mortgage rate increase. Now you guys can check that out. I mean, it shows that it really makes no sense, no difference monthly payment wise to wait for a market adjustment down if your interest rate is going to be higher. So it's also you can also see here on the right the 10-year Treasury bond, the trends, and the the mortgage rates kind of follow this here. But if you zoom out even further, so if we go out 3 years, you can see that the mortgage rates now are going back to pre-pandemic levels. So if you're comparing the mortgage rates in your head, you're thinking, these mortgage rates are, they're higher. Well, they're only higher in comparison to the last 2 years, where these mortgage rates, the market, etc., were kept lower artificially because of the Federal Reserve monetary policy, but it's the rates are still low historically. So if you exclude these past 2 years, the rates are essentially still lower than they were at any other time in history. And if you can see, even before the pandemic started, these mortgage rates were already trending downwards to the levels where they are today, right? So it's worth mentioning. Going forward, I do anticipate the market to adjust accordingly. Obviously, depending on how much the mortgage rates continue to increase and so forth. Again, in my previous video, I talked about the rule of thumb where a 1% increase in mortgage rates equals a 10% decrease in property values. But here in South Florida, there's a lot of market factors are playing. It's not only the interest rate. It's not only a one factor that affects the market values down here. There's a lot of demand in the South Florida market, so that's still going to keep the market values higher than anywhere else, in the state, or even the country, where the demand isn't as high as it is down here. Supply is still relatively low, so you have low supply, high demand. That's going to continue to keep the market values up, at least in the short term, near future. So I do anticipate a market adjustment maybe towards the end of this year, but still, if you're renting, it just doesn't make sense to continue to pay rent waiting for that 10% or X% market adjustment if you're just going to pay more on the interest rates. So just a quick recap on the market updates there. We have a higher loan limit on the FHA down here in South Florida, Broward, Palm Beach, and Miami-Dade County. You're looking at a 460,000 FHA loan limit. And again, check in your area. The limits change. We do have a Fannie Mae adjustment to second homes and vacation homes of 1%. So if you're on the fence about buying a vacation home or a second home, I strongly encourage that you guys do it sooner rather than later. And then finally, we have interest rates on the mortgage interest rates trending up. So again, that's my market update. And if you guys found this video useful, please hit the like button and subscribe. Otherwise, have a nice day and stay safe. See you guys.